Hey guys, Tommy Bryson here, and one of the most popular questions I get asked on my channel and also by my friends all the time is, tell me what stock or what investment should I make right now to make me some very quick money. But in finance, there's a saying basically that says, well, if you give a man a fish, he'll eat for a day, but if you teach a man to fish, he'll eat for a lifetime. So if all you want is like, Tommy, what stocks are you looking at? I can tell you right now, I'm looking at Delta, Target, Walmart, some banks, for example, Bank of America, JP Morgan, and a few other companies, because I think some companies are actually undervalued right now. But what do you do with that information if you don't know what I'm actually looking at to then go ahead and actually buy and execute on the trade? Now, for example, guys, a few months ago, I talked about Delta and how I was investing around $10,000 to $12,000 into the company. And everyone told me, Tommy, that is not a good idea. And whenever I would ask, why isn't it a good idea? They told me because Warren Buffett said, do not invest into airlines. But I learned one thing in finance, and is that you don't listen to what people say, but you watch exactly what they're doing. So once I understood exactly why Warren was selling his stocks, I basically said, well, I'm going to still invest into this company because I know it's a solid company and over time it will recover. Today, I'm up around 40% on Delta. Once you understand, that is the big difference. So that's my goal for this video right here. So this video, I'm going to give you 3 investments you need to make right now to understand exactly how to become a better investor. Again, this is not a video about here's a fish. It's a video about here is how you learn how to fish. You can do it by yourself all the time. And by the way, I will still make videos about the investments I'm making. Yes, don't worry about that. But I want to show you exactly how to go out there and fish for yourself. And by the way, I upload videos on this channel every single day, so make sure to also subscribe to the channel and hit the bell so you're notified every time I post a new video. And on top of that, also destroy the like button. Now, the first thing I have to tell you is this, okay? Whenever it comes to investing, you need to understand these 3 things. The first thing is this, okay? The stock market is based on investors' opinion on how the economy is going to do or how a specific company is actually going to do. 2 is this. That does not mean that a company is listed for the correct price. It just might mean that investors might think like, hey, the company is going to do so well. For example, Zoom. Or for example, they might think like, hey, this company is never going to recover. For example, like Delta. But in reality, every single company has something called an intrinsic value, meaning the true value of it, not just the market value. So as an investor, your job is to go out there and find companies that are actually undervalued compared to the market standard. And that way you invest then, and then you profit in the long run because basically you're buying at a discount. That's the entire point of this video. Now, number 1, the first investment you need to make is deciding if you're going to be a stock picker or an index fund investor. And I will talk about index fund investor later on in the video, but for right now, let's talk about stock picking. Stock picking is whenever you actually go out there and you buy a single stock. You're actually picking that stock for a specific reason. And the most profitable stock picker in history, right now, currently at least, is actually Warren Buffett. And now, whenever it comes to me actually going out there and picking a company, I always look for these 3 things. The first thing is a company that is actually going to be profitable, because a lot of companies out there don't have any idea on how to actually make money and actually keep it. A good example is actually Amazon. For a moment, everyone thought that Amazon was one of these companies, but in reality, they always had a plan on how to actually become profitable. But a lot of tech companies, new tech companies, don't have a plan whatsoever. The second thing I look for is for a company with healthy growth. If you notice, guys, a lot of companies' growth actually slows down the bigger they actually get. And then all of a sudden, they start growing like crazy. So to make sure the growth is actually healthy, you want to take a look at their 10Q forms, which basically tells you exactly if the company actually bought any more companies. Now tell me, why is this important? Well, the answer is they buy other companies, smaller companies that are still growing very rapidly because they're small, and they use that growth to basically make the company look like it's actually growing immensely. But in reality, that is all artificial. And the last thing I look for is for a company that has an edge over the competition. And by Warren Buffett's standard, this is called a moat. The answer is, for example, Apple makes phones, technology products, but in reality, Samsung Google, and a lot more other companies do the same exact thing. But in reality, there's something about Apple that differentiates them from all those other companies, and that is called having a very strong brand. And that is what you want to look for, because basically you know for a fact that your money is going to be safe there for the next 10 to 40 to even 50 years. So always look for those companies that have a strong competitive edge against their competition. And guys, most importantly, whenever it comes to investing into a company, you want to find out, again, its intrinsic value. Its assets, its liabilities, financial forms, 10K forms, 10Q forms. You want to analyze the true value of a company, and that way you know exactly how much it should be selling per share, and not just the market value of each share. Because in reality, a company might only be worth around $40 per share once you find out the intrinsic value, but the market might have it at $100 or even sometimes $200, okay? I won't mention any companies, but I made a video about a company yesterday, so if you look at that, you'll know exactly what I'm talking about. But overall, some companies are actually undervalued by the market. Why? Because sometimes things happen. For example, Delta. Nobody's actually flying right now. JP Morgan, people are scared about the banking system. So in reality, there are a lot of good companies, very good companies that basically because of current events are under stress. But once everything goes back to normal, well, the stock price for those companies are going to resume. And that's the entire point I'm making here. So always understand the intrinsic value of a company. But tell me, how the fudge do I find out the value? How do I know what to pick? How to read financial statements? The answer is, here are 2 resources that I highly recommend. And by the way, links down below to everything. The first one is, I want you to read this book by Benjamin Graham. It's called The Intelligent Investor. It'll teach you the intrinsic value formula and also how to find companies that are actually undervalued. That's the entire point. And the second resource is actually, I want you to consider taking this course. Link down below is going to teach you a little bit about investing and also finance and also how to analyze a company. Tell me, but courses are too expensive. Well, this course, which I'm taking myself also, only costs around $16. And if you look around the internet, you can probably find a coupon and buy it for like 10 bucks. And this course is on Udemy, link down below. It'll teach you a ton. And it's actually by a guy named Chris that basically worked at Goldman Sachs. Okay, so you should learn a lot. But the entire point is, to analyze companies, you'll need to know a little bit or a lot bit about accounting and also finance and also valuation. And to do this, it takes some skill. So link down below to the resources, you know exactly how to do it. Again, not a fish, but it's going to teach you exactly how to go out there and fish for yourself and know exactly what you're investing into. And now the second thing you need to learn about investing is ETF/index fund investing. And the idea is that not everyone wants to go out there and learn about how to analyze a company, learn about accounting, finance, valuation. That's pretty difficult, right? So in reality, what you can do is invest into an index fund or, for example, an ETF. And the idea is, for example, if you look at, for example, the S&P 500 by Vanguard, the ticker symbol is VOO. The idea is when you invest into this ETF, what you're actually doing is buying the top 500 companies in the stock market. So in reality, the average return over the past 50 years or so has been around 7 to 12%. So what that means is basically that every single year, by investing into this ETF, A, very low fees, B, very low risk, and also you also have an average return of around 7 to 12% on your money. Now, the way I do this currently, because I also pick stocks, but I also have ETF investments, I currently use an app called Acorns. And when I first started investing with Acorns, I had around $7.60 invested. Now, when I invest into Acorns, I invest into something called a moderately aggressive portfolio. That means 80% ETFs and then 20% bonds, which means that if the stock market goes down, my bonds help it average out, and that way I don't run so much risk. That is the idea. So right now, I started with $7.60, and today I have around $26,547.77 invested currently right now. And the idea is this, guys. By investing into this portfolio, by the time I turn 40 years old, in 17 years or so, I invest around $500 every single month. Now, I'm expected to get around a 7% return every single year, plus around 2% for my dividends, which I also reinvest. And the answer is, by doing this consistently for the next like 17 years, I'm going to have a total around $354,326 just by investing my money like this. And the overall idea is, guys, okay, by investing into index funds, you basically minimize the risk of a company going bankrupt, because by picking stocks, you don't really know if something might happen and the company might go bankrupt. But by picking an index fund, you know for a fact you're going to get the average return of the market, and that is the goal. If you don't want to do a lot of work, this is a perfect way to invest passively. Now, some resources here, guys, that I recommend you actually read this book. It's called The Little Book About Common Sense Investing by John C. Bogle. And it'll teach you everything about index funds and also ETFs and mutual funds, and that way you know exactly which one is actually best for you. And on top of that, the more books you read, okay, and the more confidence you build, the easier it becomes to ignore what everyone else is saying and just to understand exactly what's going on in the market so you can continue to keep investing and also making a profit over the long term. And by the way, right now, I'm actually up around 13% in my Acorns portfolio. While everyone says like, hey, ETFs don't really make any money, in reality, 13% is actually pretty solid if you ask me. And now, guys, the last thing, number 3, the last thing you need to invest into is basically yourself, okay? Let's be honest here. Yourself is the most important investment. So in this video, my goal was not to just give you guys like, hey, here's a stock, you can invest into it, I'm investing into it also, you'll make money in the long run. Cool, cool, cool. In this video, the whole goal was to basically tell you exactly how I learned how to invest so you can go ahead and also invest in yourself so you can figure out everything. So overall, if you want to learn how to do stock picking, take some courses and also read some books. If you want to learn how to invest into index funds, the big thing is not really like, oh my gosh, like how does this work? The big thing is just staying consistent and investing over the long run, and that way you get the average return of around 7%, and that way your money grows steadily and also with less risk. That's the entire idea of this video right here. So hopefully this helped in some way, guys, but comment down below and let me know, did this video actually help, and what do you actually want to be? Do you want to be a stock picker, or do you actually want to be an index fund investor? And by the way, if you don't want to learn how to invest into stocks, like, oh my gosh, how do I actually analyze a company? In reality, that is what they call in the finance world a speculator, which basically means you're speculating the company is going to go up, but you don't really know why you think it's going to go up. And that is extremely, extremely risky. So be very careful. And overall, guys, if you enjoyed this video right here, well, like this video. Also, subscribe to the channel and hit the bell so you're notified every time I post a new video. On top of that, follow me on Instagram, Tommy Bryson. Now, before I go, make sure to subscribe to my second channel called The Tommy Bryson Show. Link down below. And as always, if you want to watch another video and why exactly I invested into Delta, well, here it is right here. Also, click my channel. I'll see you guys tomorrow. Thanks for watching, and as always, peace.